really, Nick? That's a 4/4 string ostinato in D minor. Every sailor knows it means death.
Well, hello everybody. I hope you liked my little intro. It was what I was thinking about when the market closed here today. I was trying to find some theme music to make people a little happier, and I was going through YouTube's uncopyrighted material, which stinks. If you like techno and dub music, it's great, but if you don't, there wasn't a whole lot of selection. So, I don't know, it was Nintendo theme music, or I couldn't find a good old school Nintendo boss level nostalgic music piece online, so I just settled for Mr. Krabs with the ostinato in D minor. Classic. So, hope you liked that. Not to get too far off topic here, we're going to go through the plays of the day, particularly some of the stuff that you guys were following with me, like Ford and GM from yesterday. We're going to be going through Pandora and Netflix because they had some remarkable days. Tesla was my main play that I did today. I wasn't really happy with my performance today. I made my 30%, but honestly, there was so much money to be made today if you were just on the right side of some of these things. Did some analysis of my executions and the way that they played out. Wasn't very happy. TKMR, LAKE, those stocks there, those are Ebola related. Going to be going through those and the emerging trends in the market with, as always, a look at the macro plays here. So, as always, if you have any feedback, let me know. If you have stocks you want me to take a look at, just send them my way. I don't mind doing that at all. I'm going to try to include a couple new things here every day. See what I like and see what you guys like and get a good blend. But doing fewer stocks today to hopefully get just a little bit of a deeper look at these things and try to get more of what you guys want to look at. So, plays of the day here that we're going to be looking at. First off, the SPY, S&P 500 index, was very playable today. If you watched yesterday's video, the premise was that we're still in this downtrending bull market. If you look at the tape here today, I don't think that's a broken thesis. Today was nasty, but honestly, expected. There was money to be made in the SPY today, and good money. But I didn't think a Wednesday weekly option would pay off well, and I never short an index like that. You don't get a very good return on your money with a margin account. It's just very difficult. So, that being what it is, let's take a look at the chart here. So this is the start of September. We're now to the end of September, beginning of October. Let's take a look at when we started the last major positive bar here on the 24th. Big red, green, red. Yesterday that consolidated red trading range we talked about. A little higher volume. Made me think today was absolutely going to be lower, but to what degree? Did not think it was going to be this bad, people. Otherwise, I would have definitely been shouting it from the rooftops. But that being what, I knew today was going to be red, and I think a lot of you got that indication from yesterday's video pretty clearly. That being said, going into tomorrow, the premise is going to be you're going to have to watch the futures in the morning to get a clue of how they're going to do a setup here. There's going to be some sort of monkey business that these indexes are going to be doing in the morning, I guarantee you, because having another red candle like this, I don't see it happening. We are the one shining, beautiful, bright light in the world, and everything else is just turning sour, it appears, for most of the news, unless you're following the Ebola trends. But, you know, we have the United Kingdom with their major issues. Italy has a higher unemployment rate, and I don't even know how that's possible. I think in maybe 5 years there's not going to be a single person working in France, Spain, or Italy. How do you get much higher than a 30% unemployment rate? It's actually mind-blowing if you go through the numbers. England, actually, if you do their unemployment rate calculations the same as ours, has a mind-blowing unemployment rate, but they manipulate their numbers. But China and us seem to be the few bright spots. And China has had a lot of revisions that have not been extremely positive. Um, so nothing really good out there in terms of the macro picture. And on top of that, when we go through the treasuries, like we discussed yesterday with the interest rate issues, I think things could get maybe a little bit worse. The Fed's hand might be forced here. So going through that, the Russell, still very ugly. Nothing's really changed there. The Qs, actually, they're a little bit better than the Russells are. If you take a look at the charts here, right? I mean, the Russell's just nasty, nasty, nasty. The Qs are actually holding a little bit, which is sort of surprising. But the Qs and the Russell are definitely the one to watch at this point. If we start having more downward action, expect the hot plays to be stocks that have revenue that people like. Safety plays traditionally are like Coca-Cola, Chevron. I don't think I'd be doing Chevron with oil prices like this, but big names with solid revenue that are uncontested and that you can't really have it destroyed by an e-commerce type of thing are what you'd be looking for. Facebook has revenues now, so they might be considered a safety play, but things like that you got to put more stock into. When the stuff starts to hit, the growth story goes away. The value investors are what you got to wait for. So when they see things dipping below a level they think is inappropriate, that's when you're going to start leveling out here and things are going to start to improve. Traditionally, things like that, when you're going to start to see a leveling out in markets, you're going to see a lot of these small caps start to pop. You're going to see growth names. You're going to see bull catalysts come out, and they're going to be trending. Any day you go on a StockTwits and you see indexes trending towards the top, you know that people are not looking to put their money into a big growth name that they're sure isn't going to make money. Ebola's the exception here today. And if you really think about it, that's a growth name that people are putting money into out of fear. So even that, you're going to have things like that are safeties that are just sort of the niches. And if it wasn't for Ebola, who knows how bad today might have been in the marketplace. I think TKMR actually helped out a little bit, debatable, but definitely helped out a little bit. Dow, not much prettier than the S&P 500. If you look at that, broke through the same pivots. SPY, 1, 2, 3, ouch. Anytime you have price action blowing through pivots like that without a stop, beware intraday on that. Look at that. S1 and S2. It broke through S2 within 45 minutes. That's a scary day. This was oversold. A little bit of a rebound there. I didn't want to play the weeklies, like I said before. It consolidated downwards. It did not come back. Going through the treasuries here, we talked about the trends going on in the treasuries in the long term here. So this is daily increments again. This is going back to the second here. This is the beginning of September. Now we're at the end of September. This is the last time that we had treasuries this high. We saw 1943 is what I have marked off there. So the 119s, I don't think we can go much beyond that. And if you really think about how much lower can we go, our SPY 500 thesis here, what are we butting up against? We said low 190s is what we're looking for. This is not the feel of a start of a bear market. So treasuries could be very shortable here. So keep an eye on that if you're interested in that sort of play. But let's go to the last couple of days here, weekly. So we said on Monday there were a heck of a lot of puts being taken out on the treasuries. An insane amount of volume on that side. Gave the thesis that the Fed is going to have to maybe change their interest rates sooner than later, a very popular thesis. And I think they're right, because if you wait too much longer in this economy of ours, what you might have is you might have good economic data fade, really, because we've actually had decent data, and if you start having this bad data come back, they can't change the rates. They have to have good data in order to start hiking those interest rates. And the Fed needs to do something soon because they are a misnomer at the moment. The Fed does not have much of a reserve. If we have another big economic crisis, what can they do? go back on QE. They can't afford it. Honestly, they're holding all these bonds already that they're talking about dumping because the Fed needs money. One of the few international funds that is really doing well is the IMF. And Germany's always got reserves. They're at the strong point of the ECB. But you really have to keep an eye on this if you want to follow the interest rates. Here today, probably some safety buying. A lot of things will go into bonds if they see the stocks getting weak. Annuities and things like that will automatically do it without even thinking. So that's what that could be here today. I'm bearish long term on the treasuries. I don't think it can go too much higher. VXX, just a quick note, shot up to the 32s. Pretty crazy. The Russian index, RSX here, another horrible day. You got to go back to March here. It's getting pretty dang close to where it was in March when the Ukraine-Russian thing first erupted. The Russian economy is not looking pretty here. U.S. oil, we've been tracking this because, gosh, it looks like it could break lower, doesn't it? I mean, if you were just playing action on a particular stock, that looks like it's touching once, twice. This volume, it could get very ugly in the oils here. That's why I said I would maybe stay away from Chevron for a safety play. Gold here, a little bit of a relief day, but look how narrow that range is. And did it really recover? Not really. It could get very, very, very ugly again in gold. I don't know. So looking forward to tomorrow's open for a tell, honestly, from what I'm seeing. And pay attention to those futures in the morning after a big day like this. Pay very close attention to that. And they might play games, so have your head screwed on tight. Plays of the day. Oh, that's my Momo chart. Plays of the day, going through Tesla first here. So we had looked at the Tesla chart here, the long one, at the triangle mentioned yesterday. And anytime you have a triangle that gets into the narrow trading range, it must break one way or the other. So if you own stock and you're selling, they set this line down. If you're buying stock, that's what this is, resistance, support. One side's going to win because when those two lines collide, you can't have an existence of a stock in that state. It has to break out one way or the other, and that's exactly what you saw here today. But if you look at the price action, dip, rebound. Like I said, I played Tesla. When it first broke, I bought, wrote it down, made a nice little 30%, bottomed there, but rebounded so insanely. Like I said, Ford and GM, they will follow with Tesla. They correlate. A lot of data was coming out today in the autos. Ford actually had pretty good upside numbers. GM did too. There's the GM chart. Here's yesterday. Here's today. They had very surprising things. And remember, we were looking at that long chart for those two that could break and get very ugly, that double bottom in both charts. 9 months going back in Ford and 6-month chart on GM here. I thought it was set for some really nasty stuff, but it fought back and fought back very well. So I did not have the stock of the day to go into. Netflix here, of note, broke trend. Keep a very close eye on Netflix. Out of this long channel it's had going forever, it could be very, very, very ugly if it doesn't fight back. I expect to fight back tomorrow, but keep an eye on that. If you have news coming out one way or the other, it could get shredded. GoPro here. GoPro had a pretty good day as well. Started off a little lower, but it rebounded, same as always. Here is the TKMR chart. There is the tail end of yesterday and the jump up today. I saw the news break after hours about the Ebola scare. I had the alerts fired, and I didn't take a position because I was honestly thinking there was going to be more option plays here today than I found, but there wasn't some clear entries for me to get into. So TKMR could have bought it in the 22s and ridden it today for a nice little play, and just passed it by. Just said there's going to be something better. LAKE, keep an eye on it. They make hazmat suits. It's going to be a nice one that's going to correlate with the Ebola stories. We got a couple of seconds. ADHD, still bullish on, still looking for a bottom. I'd keep an eye on this and refer to the notes from yesterday. So guys, that's all my notes that I have for you today. I'll have some more picks there for you in the morning and some stuff to look at. But Green Guy is my handle. Follow me if you like the videos. I'll have some more for you coming up.